This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
What's more important for crude oil markets? Forecasts of Chinese oil demand growth by leading agencies or the reality of ongoing weakness in imports? Both the International Energy Agency and the OPEC talk about demand when they make forecasts as to the state of the oil sector in China, the world's biggest crude importer. This is a long-standing practice and one that is largely unchallenged by the wider market. The problem is that there is a disconnect between the forecasts of demand growth amounting to several 100,000 barrels per day and the reality that China's oil imports are actually falling.
Oil prices rose on Thursday, boosted by a strong outlook for demand in the United States after fuel inventories fell more than expected, and a weaker US dollar. Brent crude futures rose 43 cents, or 0.6%, to stand at $71.21 a barrel by 0423 GMT, their highest level since March 3. U.S. West Texas Intermediate crude gained 38 cents, or 0.6%, to $67.54. U.S. government data showed a higher-than-expected drawdown last week in distillate inventories, including diesel and heating oil, which fell by 2.8 million barrels, outstripping a drop of 300,000 barrels expected in a Reuters poll.
Moving on to the top news in the energy sector.
U.S. President Donald Trump hosted top oil executives at the White House on Wednesday as he charted plans to boost domestic energy production in the midst of falling crude prices and looming trade wars. It was Trump's first sit-down with oil and gas leaders since he returned to the White House in January. The discussion centered on pushing American energy dominance, reforming the permit process and the need to build up the nation's electricity grid to compete with China in the area of artificial intelligence, Interior Secretary Doug Burgum and Energy Secretary Chris Wright told reporters after the meeting.
Asia's sour crude demand is set to rebound from late in the second quarter as refiners return from maintenance and ExxonMobil completes a Singapore refinery upgrade that is poised to increase its heavy oil use, traders and analysts said. The rise in demand from some of the world's top oil importers led by China will support Middle East benchmarks Dubai and Oman despite the prospect of more supply from OPEC+ after the group agreed to increase production from April. After weaker than expected imports from China for the beginning of the year, we expect Chinese crude demand to resume as refinery throughputs rise, along with those of other Asian refiners, said Harry Chilagurian, head of research at Onyx Capital Group. Next, we have the top news in metal markets. China has not shipped any antimony to European Union countries since October, customs data showed on Thursday, after the dominant supplier imposed export controls that have fueled a surge in global prices for the strategic metal. Accounting for almost half of global supply in 2023, China's restrictions since last year have upended supply chains for antimony, which used in semiconductors, flame retardants, solar power equipment and munitions. Critically low stock levels in Europe have further fueled the surge in prices, with Regulus Grade II material up over 300% compared to a year ago, said Christina Belda, senior analyst at information agency Argus.
The European Union will tighten steel import quotas to reduce inflows by a further 15% from April, a senior EU official said on Wednesday, in a move aimed at preventing cheap steel flooding the European market after Washington imposed new tariffs. European steel producers already battling high energy prices and competition from Asia and elsewhere warn that the EU risks becoming a dumping ground for cheap steel diverted from the US market, which could kill off Europe's plants. During a period when nobody is respecting World Trade Organization rules and everyone refers to national security, the EU can't be the only continent that lets its industry fall apart, European Commission Executive Vice President Stefan Sejourn told Reuters.
We will now look at the top news in the agricultural sector.
China's soybean imports from the United States jumped 84.1% in the first 2 months of 2025 compared with a year ago, but competitive pricing and a trade standoff with the US is expected to boost purchases from Brazil in the months ahead. As the world's top buyer of soybeans, China brought in 9.13 million metric tons of the oilseed from the US in January to February, up from 4.96 million tons in 2024. The rise in US soybean imports is mainly due to the Trump effect, where concerns about higher tariffs led to a rush in purchasing, Rosa Wang, analyst at Shanghai-based agro consultancy JCI, said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.